Well, hello, I'm here on the 40th floor of the Heron Tower in London for the official launch of the Architas Diversified Global Income Fund. And I'm joined for a couple of minutes now by the CIO at Architas, Casper Rock. Casper, thanks for joining us. You talk about diversity of income. Why is that so important for investors?
Well, anybody who builds a multi-asset income portfolio generally fishes in three ponds. They tend to go for some equity income, they tend to go for some high yield bonds, and they will also go for some emerging market debt. Each of them individually have good attributes and generate good levels of income, but they also have a certain amount of risk. And so it's important to be diversified. But our real concern is if you have a portfolio just built of equity income, high yield and emerging market debt, those three asset classes are very, very highly correlated. So what we're advocating is fine to have some of that, but you need to have other parts of the portfolio to dampen the correlation and the volatility. And the two areas you've got to consider, one is government bonds, and the other area you really need to consider are alternative investments. And we've used alternative investments across our range of multi-asset solutions for many years, whether it be risk-profiled funds or our monthly high income. Our diversified real assets fund is a pure play on it, but this new fund, the Diversified Global Income Fund, will have an element of alternatives within it.
Well, a little earlier, I caught up with some of the managers who are running some of the underlying money in this multi-asset fund, and here's what they had to say.
The Doric Nimrod Air funds are, I think, are quite interesting funds and slightly alternative. You could think of them a bit like a single property transaction. What we're doing is we're buying a load of Airbus A380s directly from Airbus and leasing them for 12 years to the Emirates airline. And the key thing to think about is when you're renting something, a property to somebody, you want to make sure that the person you're renting it to, the tenant, is somebody who's always going to pay the rent. You want to make sure the financing around it is very good, and you want to satisfy location. In other words, buy a plane that's a very good quality plane that's going to last a very long time. The tenant also doesn't have a break clause, so the lease is fixed for 12 years. All the debt that is used to buy the plane is paid off over that 12 years, so at the end of the 12 years, when you come to sell the plane, as long as you can sell the plane for more than the equity you put in, you're going to make a capital gain, and that is extremely likely to happen through these structures.
Well, I'm Andrew Charlesworth. I'm the investment advisor to JLIF, the John Lang Infrastructure Fund. The fund invests in long-term contracted PPP, PFI infrastructure globally. The key for us, though, is to identify these long-term contracted returns with a government-backed covenant to them. Now, availability-based is the lower risk end of the infrastructure market. So unlike toll roads, where the income is volatile depending on how much they're used, availability infrastructure delivers an income as long as the facility is up and running and usable. So we invest in those projects globally, driving out yield and pushing up yield in the operational assets that we own. Now, very interestingly for us, we've been a fast-growing fund, so we're always looking to buy new infrastructure assets globally and add to that portfolio.
I'm Graham Roberts. I'm Chief Executive of Assura plc. We invest in primary care properties. It's the infrastructure basically that supports the NHS, and our tenants are primarily GPs. The way the income works is that it's back-to-back reimbursed to the GPs by the government, and it's a sector that's not had a default in its existence. Because of that, a back-to-back arrangement, so it's backed effectively by the Secretary of State. When we enter into any leases, they tend to be for 20 years plus. Our average on our portfolio, because we've been around for about 10 years, is about 15 years remaining on the portfolio. What's attractive about the sector is that the volatility is less than gilts, and therefore it's a very different type of proposition for an investor. And in addition, there is a linkage to inflation, either through RPI indexing of the leases or through a process of a rent review that is agreed with the district valuer, which ultimately links back to construction cost inflation and land values. As a result of which, it's been one of the best performing asset classes through the financial crisis because of that certainty of income.
Well, Casper, plenty of diversity there. Why is it so important?
as I mentioned earlier, it's really important to have as part of your exposure some exposure to alternatives like the managers you've just heard from, because high income or high yielding stocks, high yielding bonds and emerging market debt do have high correlations. And so it's important to bring in an element of real diversification to your portfolios. And the effect that has is, if you think of an efficient frontier, what it does is it has an ability to improve the returns and reduce the volatility over the longer term. And that is what we really want to deliver for clients.
Kasparov, I better let you get back to your guests. Thank you very much.
Thank you very much.